Thank you, Tommy. Ladies and gentlemen, it is my distinct pleasure to introduce our presenter today. He is the best-selling author of Bank 2.0 and Branch Today, Gone Tomorrow, the founder of the Movenbank, Movenbank, and a strategic advisor to the world's leading financial services organizations. Ladies and gentlemen, please welcome Mr. Brett King. Brett, I will turn it over to you.
Welcome all. So today I wanted to talk about this concept of digital relationships and building strong relationships with your customers on a digital platform. The concept that the branch builds great relationships with customers, and that in that respect, digital channels are inferior. I sort of want to challenge that a bit today, but then talk about the practicalities of having a strong relationship with a customer who doesn't visit a branch. So I know this is a concern for many organizations who have been branch-led for most of their existence and now shifting this, thinking about the uncertainties behind this. So I want to get into that and be happy to take your questions during the event. So we don't have to wait till the end of the event. Just put them up on the chat screen, and I'll address those issues as we go through the presentation. So I've structured the presentation into two parts, really. The first is I'm going to give some introductory thoughts, and then there's a framework of key issues that came out in the lead-up to the webinar. Primarily questions that were submitted by the audience and concerns that they have, and sort of the key hurdles to the next generation of banking in terms of digital engagement. So if you've got any questions throughout the process, just make sure to put them in the chat screen, and we'll get to those. So first of all, let's start off with how we do banking today. We've traditionally measured high-quality service engagement as a process. The best quality service engagement we can have, we build into the branch experience. This has been the foundation of banking. We talk about this being the highest quality of interaction. We talk about the ability to give advice. All of these components have led us to a business which has been predicated on when you want to start a new relationship with a customer, you funnel them into the branch. And everything about our business is really, from a retail financial services perspective, is designed to send out these messages, send out these campaigns, and engage you in a face-to-face interaction. Because the feeling is if I can get you in that face-to-face interaction, I can explain any complexities in the product, I can help you through the compliance process, and it's just better for us as an institution to be able to do that with identity verification, all of those things in a physical place. So our advertising strategies, our marketing campaign strategies have all been really leading the funnel of sales activity into the branch as the best place to engage customers. And traditionally speaking, the business of banking has been measured on the success of revenue delivered in the branch as well. So we've got so much riding on branch at the center of engagement of customers, that when these new channels come along, like the internet and mobile and social media and these other things, we try and figure out how to tack it on to the business to add some value. But we've really been half-hearted in our approach in terms of revenue and so forth, because the processes are hardwired to support the branch structure. The compliance guys really prefer it if we can do it still in the branch, because that's easier for us. We've got these processes that we've developed over a long period of time, and we know the risk guys are comfortable with that. We know from an enforcement perspective we've got an approach here that can protect us. So everything really is geared towards this. Problem is that while we might think that this is a high-quality service engagement platform today, this is no longer how customers think. Now customers want solutions to their problems in real time, and that's the best quality service that a financial institution can give their customers. Solve my problem right now. in real time. Don't make me wait for it. Don't force me to come to a physical place to do this. That's not necessarily, I'm not going to consider that great service if you could have fixed this online or you could have fixed this on my phone and instead you forced me to come into a branch. This is no longer a great quality service engagement. It's no longer a relationship play. Now you've actually damaged my relationship because you've forced me to do something I don't want to do. And in the research, the qualitative research that we do with customers in the retail banking environment, this keeps coming up as an issue for customers when we ask them about their branch activity and their activity in respect to retail banks. We will frequently be told by these guys that they're often forced to go into the branch. And when we ask them how often a year how many times a year do you go into the branch, the sort of comments that are consistently coming across are, I might go into a branch once or twice a year. For something that I want to do, but at least a couple of times a year my bank is forcing me to go into a branch because that's easier for them and they're getting me to sign a piece of paper or they're getting me to do this. So we have a lot of friction now in this process where there's a certain segment of customers, obviously, that still like to go in the branch, but the majority of customers are changing their behavior. They do most of their day-to-day banking now through internet banking. Increasingly through mobile banking. They don't see the need for regular interaction in a branch unless there's a service issue that's acute and they really need to see someone face-to-face to take them through that. Now, if you look at the overall relationship of a customer, those instances where you have an acute requirement for a face-to-face interaction with a banker can be distilled down to just a handful of occasions throughout their entire lifetime of the relationship with the bank where they absolutely need to see someone face-to-face. The rest, often it comes down to just pure utility. How do I get this stuff done? And again, this is why high-quality service engagement for customers is not a face-to-face interaction, but solving the problem that they have. So this is the environment that we're going into right now. But of course, many bankers will challenge this concept and say, but there is no replacement for face-to-face. You can't get a computer, you can't get a website or a mobile phone to give you the quality of engagement or interaction with a customer that you can get in the branch face-to-face. It's not personal, it's detached, it's cool, it's cold, hard technology, and often if that technology doesn't work, it frustrates customers. And it used to be that was probably a fair comment, but today with the rich user experiences we're seeing developed with improvements in usability, with these very cool new devices that we have that help us interact with technology, these app store platforms and so forth, this dynamic is changing some. So let me illustrate it this way. The concept that you can't have a digital relationship that is the equivalent of a face-to-face relationship in the branch really isn't supported by the way people are using these technologies now. So we know, of course, in the online dating space that 1 in 5 couples now meet online. And if this is a fundamental core relationship, far more important than a banking relationship. So if we have 1 in 5 people, at least in the United States, meeting online, then you could not argue that the channel doesn't support relationships, that web and digital don't support relationships. And just as in the case of meeting online, we now have a situation where, as a result of these new technologies like Facebook, that relationships can be disrupted because of technology as well. So the correlation of technology in relationships now, it's part of a relationship. It can be used to form very strong relationships, very strong bonds, and if you don't respect it, it can also destroy relationships. So this is the challenge that's presented presented to banks, is that right now what we have is that if you don't get the hygiene factor of technology in the relationship with your customers, just like we have in the instance of Facebook and divorce rates, we can destroy relationships through a poor application of technology. So it doesn't matter how good your branch network is in this situation. If you don't get the hygiene factor of a digital relationship right, you can also really destroy a relationship if you rely only on the branch, because digital is such a strong component of this moving forward. So no one could argue that digital can't form strong relationships with customers if digital has shown us in the past that the fundamental relationships like friendships, marriages, and so forth can be now conducted in many ways in the digital space. You can't argue that a consumer relationship with a retail financial institution couldn't also be done in the digital space. Now, this is obviously going to accelerate the shift as a result of changing behavior and dynamics around digital natives. The key challenge for banks is that these digital natives who will be mobile banking first within just 3 years, that is, their preferred day-to-day banking channel will be dominated by mobile. And then the rest of us, it'll be only just the year later. So this is only 4 years away, where mobile will be our #1 day-to-day banking channel. Number 2 will be internet, and then other channels will follow. So this is going to be our primary day-to-day way we conduct banking, whether it's checking an account balance, making a payment at a point of sale, sending our friend money, or paying a bill. These day-to-day interactions with the bank will primarily be conducted through technology. To illustrate it in a different way, I think I've just lost the slides there for some reason. But to illustrate it in a different way, if you take the interaction we're facing in respect to digital, by 2016, approximately we'll be using mobile approximately 20 to 30 times a month for most customers. And we'll be using our internet, tablet, browser capability to access the web now, maybe 7 to 10 times a month on average. Then we'll be using the likes of our ATM machine, maybe a few times a month, 3 to 5 times a month. I don't know how many times a month you guys use the ATM, but obviously as mobile wallet starts to become more dominant, we use that technology less. And then call center. We might need to call a call center once every couple of months, depending on the fraud issues related to use of the card and specific transaction inquiries. And the trend is that by this period, by 2016, that customers will be only visiting a branch once or twice a year. Right now, today in the United States, that average is about 3 or 4 times a year, and this is reducing rapidly. Considering that in 1995, the average customer would visit a branch twice a month, this is already an 85% reduction in branch activity. So this has already had technology's already had a marked effect in that respect. So I don't know whether everyone can see the slides here. I've lost them on my screen, so I'm gathering you guys can't see them, but I'll keep talking through this stuff, and you'll get the main points through this later. We can get the slides to you later, but you get the main points through the webinar. Hopefully we get the operator working on the visuals while you...
You can advance it by saying next slide.
Pardon?
You may advance by saying next slide.
I've done that, and it's just coming up with a blank page on my screen, but that could be my screen. Is everyone else seeing the right pages? Okay.
Yeah,
so
it's not advancing. Can you take a look?
Yeah. Yeah. No, so the last slide, the 70% one is I should be on slide 8 by now, but it's not working. So thanks, Joe, Robert, Jeff, for responding. We'll keep blasting through this. We seem to have a problem with the visuals, but we should be at the first of the detail slides now, which is slide 9, if we can. So let's go through some of the key challenges while the operator is working on that. I wanted to talk about the big challenges in making this shift to a strong digital relationship and really engaging customers in a constructive manner. And I want to focus on really 4 key components of that. The first is mobile deployment and the use of mobile, and this is from both a mobile and an iPad or tablet perspective. Second is social media engagement. The third is the use of customer data, and lastly, I want to talk about organization structure. So this is really going to be getting into how it is that we are changing the mix of this technology in the use of or in the conducting of a relationship, and hopefully get you guys some thoughts in terms of how we make that transition. So if you guys have any questions as we go through, this will be the time to ask those. So first of all, one of the questions I get asked quite frequently is around mobile deployment in terms of how should the mobile team be structured? Should it be developed internally? Should it be outsourced? Should we go app? Should we go native or HTML5? Is a mobile browser site appropriate? What is really the right approach to go with mobile? And then, what do we do about wallet? And should we just do it on the iPhone, or should we do it on Apple and Android? These are sort of the questions that typically get asked on this side of things. So let me give you some thoughts around that. So the first thing is, if you look at dominant platform today, then obviously the iPhone is the strongest from an app platform perspective. And I would say as a hygiene factor, you need to have an iPhone app in this space, because primarily most of your users will be accessing that. And I think the important thing is here that they won't come to your website and do a search for your mobile website. They may come to your website, but just as equally, many customers will simply just go to the Apple iTunes store and try and access your site that way through the iTunes store. So try and access the app that way. So if the app is not on the store, then they're probably not going to know that you have a mobile capability. So there's a few notable brands that have gone down the route of saying, "Oh, we'll keep a mobile browser because it's easier for us to do. We don't have to work in an environment that's outside of our control," such as in the case of an Apple, where the App Store is not owned by the bank and not controlled by the bank. So if you've got compliance and risk guys who are really concerned about this, then they're going to say, well, let's avoid the use of a non-proprietary platform and work on it that way. So the problem from a user perspective is, if you're not on the App Store, then there's going to be a number of customers who just aren't going to see your technology. They're just not going to be able to access that. So App Store's basic. Obviously, Android is now pretty much a requirement these days as well. It depends which geography you're in, but here we are. I can see the slide. It's back up now. This is pretty much a call. What sort of cost should you be spending on a good mobile app? Again, it varies. If you take the development in-house, then it actually is more costly, generally speaking, because you're having to pay to learn the experience, and you're having to pay to build from the ground up. Often if you can outsource the build to individuals who've worked on other apps previously, then some of the animation and core components that are design patterns. Thanks, Amy, for your feedback. Some of those design patterns in terms of the app design are already embedded in their experience set. So it means a faster turnaround generally if you outsource it. And I would liken the build of an app, whether you should take it internally to doing it externally, as something probably akin to, say, developing a TV commercial for the bank. You probably wouldn't consider necessarily going and getting all the equipment for it to do a TV commercial, hiring cameras and sound technicians and cinematographers, and building up the team internally to do that, because there's people who've got considerable experience with that. Now there is a secure element of this, but that can be done through the interface between the app and your back-end systems. So the secure element definitely, I think, should be handled internally or as part of the integration with the core. But the app, it's pretty much a commodity these days, and one of the advantages of going outside is outside of the organization is that you can reduce the cost to build through outsourcing that. Now, how many apps should you have? This is a good question. We get a lot of people, Citi is a good example. I think Citi's got 6 different apps. Chase has got 4 here in the US, I think. There's a bunch of banks that have multiple apps. They have apps for shopping deals and card usage. They've got apps for the bank. They've got iPad apps that vary. They've got apps for wealth, high net worth individual clients or the mass affluent in terms of utilization. They've got lots of different types of experiences depending on the context of the app and where it's being used. But I do think that over time a lot of this will consolidate, particularly around the mobile wallet, because I think that the beauty of mobile is not It's not taking internet banking and putting it on the mobile phone. The beauty of the app will really be contextuality of your banking experience. So to put that in a bit more detail or give a bit more context around that is the current shortcoming of your debit card experience is that when you go to the point of sale and you swipe it, I don't know what my balance is before and after the transaction. The only feedback I can get from the debit card is whether the transaction's approved or declined. But obviously, with an information environment, a rich information environment on the mobile phone, I can see the account balance before I make a payment. I can use the phone to make a payment and get immediate feedback. I can also see now contextually how I'm using money, and I can start to get a feel for that. I can also start to present offers. I can now start to think about whether or not this purchase decision is a right decision for myself and the family, if I can afford it. There's so much rich information that can be done around the mobile payment that I think the wallet itself will become, for your primary bank relationship, will become definitely built into the experience. It will become a primary part of the relationship. Why do I say that? Purely the number one piece of information requested from any retail bank in a bank relationship is how much money is in my account. So providing that information every day is critical, but connecting that information to a payment scenario is actually even more important than just knowing how much money you have in the bank. Because knowing how much money I have in the bank before I make a purchase actually is probably the most important information I need to decide on whether or not I should make this purchase and affecting my financial health. So if you want a strong relationship with your customer, telling them how much money they have and helping them make a decision in terms of how they spend that cash is going to become increasingly critical. So a core mobile banking app with a wallet built into it will be, I think, one of the staples of the mobile platform moving forward. And although there will be other wallets on the phone as well, there will be store wallets, there will be telco-based wallets or independent closed-loop wallets. There'll be open-loop systems like ISIS and Google Wallet, which will say you can put any card or any bank relationship in this wallet and use it, and you can choose which card you'd like. The advantage of having a relationship with a customer, being able to share with them their balance and give them feedback around a payment will be something that we should, as retail banks, really capitalize on moving forward. So I think a mobile banking app with a wallet embedded in that app will basically become the hygiene factor. It'll be like the debit card that we issue today, except it'll be a smarter debit card on your phone that gives you feedback as you use it. So the replacement of the debit card, the new bank account in the future will be a mobile app integrated into your phone for payments. That's what I see as being the replacement of the passbook, the checkbook, the debit card in the future. And this is what we'll call our bank account. And the ability not just to see our relationship with the bank and see how much money we have, but also contextually see how payments affect my financial health is really going to be a core part of that platform moving forward. So I hope that makes sense to everyone. In terms of the iPad, well, the iPad would be where I can manage more complex decisions, more complex interactions. It might be easier for me, for example, to do a bill payment for an iPad, whereas a remote check deposit capture is easy to do on the phone. Bill payment, if I want to drag and drop funds from one account to another, or send money to a vendor or in a commercial relationship, things like that. If it's in a setting like the pool cleaner or you're someone looking after daycare, it might be simple as taking your phone out and tapping your phone to another person's phone to make a payment. In that instance, the contextuality of that type of payment drives the mobile at the core of it. But when it comes down to understanding information about an interaction, then the iPad obviously has a superior platform, a superior landscape in terms of being able to have a richer experience. Managing investments is one of those areas, for example, and there's a bunch of those things. Interestingly, in the test that we've done with this, the older consumers who are right now quite reluctant to move on to mobile banking, one of the reasons often cited is just such a small screen to work with. So they prefer to work with a larger screen. So that's one thing to consider for trying to migrate your senior customers onto digital platforms, that you will need to think about iPad. And in fact, some banks are taking this one step further. Banks like RBS Coutts, known as the Queen's Bank, often in the UK, these guys, they actually give away an iPad to their private banking customers with the tool set on it. Okay, so that's a few thoughts around mobile deployment. I'd be very happy if you've got any questions specifically on that to take those, but we'll move on to the next section. What about social media? So it's interesting when I wrote Bank 2.0 back in 2009, Facebook was just crossing the 300 million mark. And today they have 1 billion people on the social media platform. And it's interesting because we've still got people scratching their heads going, we don't quite know how social media works, and we're not quite sure whether we should integrate this in respect to the business. How do we do that? A lot of risk, a lot of exposure. But here we have, there's only one other company in the world that has ever got 1 billion customers, which is Google. And if you can do that only by sort of talking about platform research in terms of people who use the search engine. But Facebook is the first company globally in the world to have 1 billion customers on their platform, using it on a regular basis. Now, you can argue that a number of the Facebook profiles are bots and constructed identities for marketing and those types of things. But even if you were to discount it by 30%, this is still a phenomenal achievement, having the average Facebook user using the platform 8 hours a month, many checking it 20 times a day to see what their friends are doing, and the average number of Facebook friends exceeding 100 friends. This is an incredible number of connections. And while there's a billion friends, there's over 140 billion connections on Facebook if you take all of the different friendships and connections, network connections that are made. So this social media is here to stay. In terms of the way it will be integrated into our life moving forward, it may change. We see Pinterest and Instagram becoming more visual. Social media integrations. We see the messaging architecture changing to some extent, but this is not a case of social media is not going to ever disappear again. It's like saying the internet's going to get turned off one day. It's just not a likely scenario. So we do need to start thinking about relationships with customers in this context of social media as a platform. So how do you have a relationship with customers on social media? One of the key concerns for me has been seeing that a lot of, when these new technologies have come out like social media, a lot of people have jumped onto social media and started shoving marketing messages down the social media platform or trying to get customers to like their page on Facebook. These are not particularly constructive activities. So how can we use social media as a best practice instead of just using it like a newspaper channel or a TV commercial to push more marketing messages down? There's really two primary uses that we see for social media right now in the banking space. The first is that it is an ongoing dialogue about the brand, and that customers can come in and they can talk to the brand about issues they face, and we can start to get a feel for how customers are interacting with us, how they're using our products, what's important to them, what are some of the drivers. Think of this as real-time customer research. We're often going out there trying to do customer surveys and the like, trying to understand how our customers are feeling about the brand, how they think about our service. But in the future, why not tap into this crowd who's there on social media who are happy to talk about the brand? They talk about the brand to themselves, between themselves, and they often interact in that way. But now let's invite them to talk to the brand and express what they want from their bank and what they want from their relationship. And this leads to the second component, which is really around service. And it's interesting that customers who use platforms like Twitter and Facebook expect them to be strong service channels. They come into Twitter and Facebook today and they will send a request or inquiry to the bank which would be identical to an inquiry that they would give the bank walking into a branch or ringing up the call center. They just expect an answer from the brand. And this is one of the biggest challenges we've found with social media platforms, is that service often slips because it's seen as a marketing channel and not as a service channel. And so the skill sets within the social media team that manage the channel are there managing brand messages and really aren't consistently managing service inquiries or questions from customers that come through this channel. So what are some best practice examples on the social media side? I would encourage you guys to have a look at ASB Bank in Auckland. ASB has a really strong social media platform. From their Facebook, Twitter, they've really got a great platform in that respect. Simone McCallum runs the program out there. Some of you may have seen me retweet her on Twitter. You should feel free to get in touch with Simone. She's very responsive to that sort of stuff, and she's great with it. Now, what they've done at ASB is they've created a social media team that connects, sort of sits between the glue of the marketing brand team and the service channel. They can funnel service requests directly through to staff assigned in the call center to help them answer those problems, and those call center staff will liaise directly with the customer through DM on Twitter, for example, and solve the problem as if they were doing that on a call center scenario. In terms of which social media platforms to engage on, ASB has been strong on Facebook and Twitter. There's a few that are starting to experiment with the likes of the Instagram and Pinterest, although I think from the hygiene factor today, Facebook and Twitter are the primary mechanisms. We don't really see Google+, Tumblr, Instagram being used strongly by the bulk of consumers as yet. That may change, but in the short term, Facebook and Twitter are the primary channels. So how do we engage? Well, it's really key to have an open platform and have open discussion. Some of the players in this space have, when the pressure is on, have found it quite difficult to respond. So when you have a corporate communications team, for example, managing the social media channel, and when you have an event where, for example, like B of A, when you put out a new debit card fees, a minimum $5 fee, or the likes of Westpac in Australia who hiked up their mortgage rates at one point, you're bound to have customers come along and express their dissatisfaction in an open forum. On Facebook. Remember, you don't own the Facebook platform. You rent it from Facebook effectively as a brand. So when you try and assert control over those channels, such as when Westpac started deleting negative comments on their Facebook page from customers who are upset about the rate increase or rate hike, then that actually has an increasingly deleterious effect. Customers view the brand quite poorly. So the point of the platform is not that you can control it or spin it or engage it or manage it. The point of the channel is that you're engaging with customers in a conversation. And as soon as you attempt to control that conversation, or you push marketing messages exclusively down that channel, you destroy a fantastic opportunity to build a relationship not just with individual customers, but with your customer audience as a whole, and get some brand credibility. So that's really, really important. Okay, so if you guys have got any questions on this, we can come back to it, but that's sort of the basic principles there. What about customer data? How do we deal with customer data in this new challenging environment? One of the things that we've seen banks get very nervous about is that key data points around identity verification, key data points such as social security number, mother's maiden name, your address, your relationship status, all of these types of things that can be shared in one form or another in this new environment now. This data was previously considered very secure, and you should protect it, and you should deal with it very carefully. But we're seeing a new set of behaviors, particularly in the digital natives and the Y-gens, where they share everything. So trying to get them to restrict what they share about themselves on social media platforms, for example, is just impossible today. So now we have a situation where they're sharing information that now could lead to identity theft. So what do you do with that? Do you now say to them, you shouldn't share this information because someone could steal your identity or could construct a false identity using your details, and this could compromise your credit score? Is that realistic? Or is there another view to this? Well, one of the challenges we have is that exposing customer data is increasingly common, and customers are exposing that themselves. And they're unlikely to reverse that trend. So one of the challenges we face is that traditional approaches to identity verification are starting to break down because of exposure of this poor customer data. So what do we do about that from a risk compliance perspective? Well, we now need to start thinking about customer data as a different approach to IDV. We need to start looking now at the behavior of customers, all the heuristics information, how they behave, what they do, when they do it, where they are when they do it, all of that type of information and data as a better way to have a view of those customers, a better way to really start to identify a customer and engage with them. And customers will be willing to share with you a lot of information too about their satisfaction, about their behavior, about their needs, about how you can improve the relationship with them if you let them, in return for benefits, in return for either pricing benefits or good advice. And this is where we really need to start thinking about these new digital platforms. They enable us to have quite an open relationship with customers in terms of their needs and behavior, and gives us opportunities then to anticipate their needs or watch for events or triggers where we can provide a financial product or service to them to solve a problem. In the old days, we used to talk about the fact that customers would come in the branch for advice. I believe, though, today that if you ask most customers when they last got advice in a bank branch, they'll probably tell you never. I think the myth of advice in the branch is just that, but digital enables us to give advice in real time every day. Now there's a trade-off here. There's a risk trade-off from our perspective. We have to handle risk in a different way. But for customers, they are prepared to share data and get information back from us in return if there's value. We're not talking about offers. We're not talking about sending them an offer for a particular financial product and just that, but we're talking about really this advice at scale. Tell me when I need to be thinking about credit lines. Tell me when I need to be thinking about managing my finances differently. Tell me when I need to be thinking about investing my money differently. Help me make the right decision when I need it. If I'm out looking at a home, tell me what I can afford from a mortgage perspective. Tell me whether or not this is a good investment. It's those types of things where customer data, it's not just about getting information from a customer, but helping understand the customer and their behavior and delivering to that customer when and where they need a bank product or service. This is really where I think the future of this platform is going. Now, to manage this, we are going to start to really need to build a strong analytics team. We talk about big data and things like this, but we are going to need to have a customer interfacing team that is looking at this data, looking for stories in this data, looking for commonalities, and figuring out a way to deliver the right product at the right time. What is the trigger? Is the trigger based on a life event, a goal? Is the trigger based on where they are? Is the trigger based on a time of day? What is it that triggers a need for the customer to seek advice from the bank? And rather than say, well, they can come and see us if they need advice, now let's start to be proactive about that relationship and start to anticipate their need for advice. And then instead of selling them a product, what we're actually doing is providing a service, and the product fits into a service culture rather than a sales culture. It's no longer an upsell or a cross-sell. Now it's the bank solved my problem, and this was the product that solved the problem. So this is really the huge advantage that customer data in this digital relationship enables us to do. And in many ways, this is far superior than the relationship we have right now, which often, I've got friends in the bank industry who call it the lucky to be a customer scenario, where customers are, they have an issue and they come down the bank and they need a solution to this. And what we do is first off we say, well, hang on, you've got to fill out all this paperwork, and maybe if it passes muster when it goes through risk review, maybe then we might let you be our customer. This is shifting that dynamic where we're now not waiting for a customer to come to us and then going through risk review. We're understanding the customer and their behavior every day so we can make a risk assessment in real time. And we're looking for opportunities to provide advice and solutions when and where customers need them. That's that next shift. See, customers don't buy products. They don't buy products off banks. They don't buy a mortgage. They don't buy a car loan. They don't buy a credit card. What they do is they buy a home. They buy a car. They go shopping. They go traveling. And understanding that financial products and services fit into their life contextually will fulfill a need in their life, and that is the role of the financial service provider. That's the opportunity that's presented as a result of this new digital platform and a digital relationship, and the data opportunities that surround it. So understanding your customer's behavior, this is going to become the art of retail financial services as we move forward. All right, so what does the organization look like that deals with this in the future? Who owns the customer? Where does the branch fit? All of that. So one of the key changes is going to have to be around metrics. The way we measure revenue in the bank is no longer going to be really predicated on a product that's sold through the branch. We really have to understand how a customer engages with the brand